Hello everyone, welcome to Open Banking Week. I'm Bhupinder Singh, and I run a startup Openasia out of UK, and we specialize in open banking-based solution for the bank. Today, I'm gonna talk about open banking ecosystem. Okay, I think I would like to define what I think is the open banking, and by defining some of the traits of the ecosystem. Traditionally or historically, the banks would not expose APIs or data sharing, and where fintechs or TPPs, third parties, have to resolve to the method of screen scraping to get hold of the customer transaction or the banking through the banking portal. Also, there is no direct way or easy way to initiate payment using APIs. But in case of open banking ecosystem, if the APIs are defined, then the money movement between various bank accounts from A to B could be leveraging APIs. Also, the data sharing could happen, or the transactional data sharing could happen through the use of the APIs for the various innovative products and services. Um, Another important part, it doesn't require a customer to share credentials, hence it's more secure and safe from the consumer perspective. And the data could be transparently measured and reported about the moment. Okay, in this slide, I like to define what open banking ecosystem from top to down approach look like and what various actors and parties involved. So I think at the top, it's government and the regulator, and they have a prime role of defining a policy framework for open banking. And then they also need to set consent and privacy laws so that the consumer information can be safeguarded and could be easily transferred on the digital channels using APIs. So consent and privacy laws are the critical pillars or the important pillars for the open banking framework. So moving on from there, I have highlighted four other actors or participants. So one of them is central directory, which I'm going to talk about in detail in coming slides. But central directory is a place where the banks and the fintechs can discover each other, and it helps in the participation or easy integration for the TPPs. Certificate authorities. So these are the trust anchor providers, which are the digital certificate providers, and which would be required by the fintechs or the TPPs in order to secure the transactions or the integration point between the various interfaces. Integrators, these are the product and services companies who might have identity access management solution or API gateway or another solution which could help in the integration. Auditors, this is to help review the implementation and the standard and the quality of the implementation. So moving on from there are these participants from the extreme left. I have categorized account providers. So these could be banks, credit unions, or e-money institutes who happen to have a bank account. And those bank accounts would need to be exposed on the API standards, primarily, or at least on the three parts. So in UK, we have APIs for account information exposure, which would allow the fintech to get hold of the consumer data once consumer has granted the consent. And then there's a payment APIs. They are used to initiate payments on behalf of customers. And card APIs are the new ones, which essentially say that which could essentially mean that the consumer can use the credit cards or the debit card numbers in order to initiate the payments. So this is more like supporting card-based payment, but using APIs, which could start from a third party. In third party, it could be fintech, which is licensed. The other thing to note is the channel. So APIs make the product and services omni-channel, which means that the products can be delivered on the mobile platform, on the IoT devices, or normal traditional website, which customer can interact. In short, what we have realized in UK, this has led to a lot of innovative product and services, enhanced computation, and I believe that's inherently would make a good use for the customer for the high customer satisfaction. I would like to highlight a few terms. So ASP is known as Account Information Service Provider. This could be a fintech who want to provide personal finance management or insight into your transaction. So those is based on the account APIs or read-only data. PISPs, these are the fintechs who would like to get hold of the payment APIs and make the money movement from account A to account B. Remember, it's between account to account, and fintech or TPP, it is just a facilitator, or it's a medium to initiate payment on the behalf of the customer. CBPI, this is card-based payment instrument. As I said earlier, this could be used in a similar mechanism to make payments from account A to account B. Okay, in this slide, I have tried to highlight what I think the 8 steps need to happen in order to implement open banking. The step 1 is the conversion of consent and privacy law into technical standard. So as highlighted in previous slide, that the policymaker or the government have to have a law for consent and consumer protection, and then those laws need to be transferred into a technology technical standard so that that can be implemented or enabled during the open banking API interfaces usage. Okay, step 2 is the definition of the API and the payload standard. So APIs are the primary channel which define the medium and mode of the transportation of the data from the bank system to a third-party provider. Having a uniform and a single standard of API will definitely help a given market in faster adoption and easy integration. Because fintechs would obviously have challenges if they have multiple standards within the same justification, and that will hamper their development and will create some hindrance and barriers for integration for them. The security standard, step 3, is the one of the most important steps because this defines how the APIs are secured and what kind of security mechanism are available. This is another critical part in the open banking ecosystem. Step 4 is definition of customer experience guideline, which is more to say that what is the consumer experience in terms of UI and UX. If it is mobile-based application, then the feature exposure or parity should be done between the fintech app and the bank provider interface. It is important to note a bad customer experience or interface would lead to high customer dropouts and essentially making fintech proposition less appealing to the consumer usage. So customer experience guidelines are very important in the open banking framework or ecosystem. Step 5 is based on what I said earlier, central directory, which could help facilitate the adoption or a quicker adoption of the open banking ecosystem because it facilitates the control of the participating TPPs and for them an easy discovery of the bank interfaces and the technical endpoints. It could also provide more meaningful information in terms of point of contacts and help information which a fintech or a TPP could reach out in case of issues. Step 6 is more to say what are the operating parameters or KPIs which are required to be maintained both on the banks and the TPPs. So it could be in terms of response times, it could be in terms of error codes, it could be in terms of security key standards, encryption standards. So those could be all could be captured, that what are the minimum KPIs required for them to be met. The step 7 and 8 is more on the bank side. It's to say that banks must publish a sandbox so that fintechs can develop their products prior to go to market. And lastly, the step is more from the government and the control side. They must define milestone based approach or the based approach for the launch of open banking and have clear expectations set for the banks for to enable the APIs. What we have seen without milestones or phase defined, open banking would be delayed possibly by the slow adoption by the banks. Okay. As I like, I will talk about more about the central directory because this, I believe, is a game changer, and this could help in the faster adoption or implementation in a jurisdiction. Just to highlight, this model which I'm depicting is based on the UK implementation, where there's a central trust ecosystem which binds together the bank's interfaces or bank discovery interfaces and allow vetted and verified TPPs onto the ecosystem and issue them digital credentials. So what I'm trying to highlight in this process is that banks by default are the custodian of the data, and they will be their profiles will be created on the directory system along with the endpoints or the endpoints which will define where their systems are living. But when the fintechs need to onboard to this directory, they would need to go through various checks and balances. So it could be checks and balance for a fintech or for their organization establishment, which could be company registered. It could be checks about their regulatory license, which could be issued by a national competent authority or a regulator, which essentially would define, what kind of role they have. In the UK, we have at least two big categories. One is about the TPPs of fintech who want to use account APIs to become an ASP. The second is the payment initiation based use cases where the TPP want to move money on behalf of a customer. And certificate providers, they also become important part because they are inherently the mechanism which provide the trust mechanism to the whole ecosystem. And also along with the digital setup, the fintech can also discover the business contact, the technical contact, and any other information just by being on the directory ecosystem. And as I said, this model was developed in UK, but now it's being adopted by Brazil and Bahrain because I believe it's a faster and innovative way to kickstart the open banking. And also, the central directory could be used in real time during the customer transaction to check the status of the TPP at point in time, which gives a really high security in case of TPPs going rogue or TPPs who are not who have been blacklisted. Okay, the other important topic to mention. So based on the privacy and the trust or digital trust mechanism, the consent dashboard is required to be developed. So this is a dashboard which would say the allowed permission and allowed permissions which were granted by the customer to a TPP during the accounts or payment journeys. And so consent dashboard need to be unified. It need to capture all the events along with the TPP name, the permissions granted, and it should also have ability to revoke at given point. And then it should also and then it should notify the corresponding TPP. So this consent dashboard usually lives with the bank, and it is usually their responsibility to notify the termination of the relationship. Yes, the fintechs can also have the similar concept or similar dashboard in which the consumer can terminate the relationship with the fintech and also notify the fintech that they need to terminate their any sessions or any tokens or any consent granted as a part of the journeys. So consent dashboards are very important because uniform implementation across various banks would lead to a harmonized experience for a consumer and more awareness of the concept of consent. Okay. The one of the other important topic is the security standard, which I will talk about. So FAPI is known as financial grade APIs, and its origin are based in the UK, where the first implementation of FAPI was called security profile. But now FAPI has become a global standard. It is being developed under OpenAI Foundation, and it has some very distinct components which are depicted in the diagram. So I would just quickly go through them. So OS2 authorization framework, it's a setup of what we call authorization server, which help the delegated relationship between the TPP and the bank system. So this is a component which governs the issuance of the tokens, and those are the tokens which are used subsequently to access the data on the APIs. OIDC is the authentication framework, which is trying to prove what is the digital identity, or it is trying to transfer the digital identity of the bank customer from bank to the TPP. Bear in mind, these two standards working together in conjunction, and the one other feature is that in this case there is no credential sharing of required by the customer to the fintechs. And essentially, it's a very secure standard, and it helps to protect the APIs, which could be used on all the channels and enable robust security. The other two things to mention is JARM. This is to initiate, or as it says, secure request initiation. So some of the complexity of the payments can be abstracted and presented earlier to a bank, and then there's those the fine grained information could be linked to a particular type of payment initiation channels. So JARM is the latest standard which is trying to solve the permissions in advance, and then those permissions could be linked to a particular payment or account type. And lastly, I will talk about on this slide SIBA. So it is client-initiated back channel authentication. This particular protocol or standard was developed to solve the point of sales use case, because in that case there is no web browser. So in order to support the payment use case in which third party can take payments from customer account to merchant account, SIBA protocol helps. And typically all these standards of FAPI make a part of the identity access management product or identity access management stack. Okay, so in this slide, I have tried to put together summary of an open banking system and which a bank need to implement. So typically, the banks would have a concept of a system which would reflect the consent, account, and payment system. Or these could be also a core banking system. The API gateway is the doorway or gateway for the TPPs to connect, where the APIs are published for account or payments. And IAM, which is the identity access management stack, where that is responsible for authentication, authorization, and consent part. So typical journey in open banking look like the consumer downloads an app and creates a profile, and then based on the TPP capability, they would register some interest with the bank system, what we call it the register of consent or intent. And then the TPP or the fintech would try to get authentication and authorization. This is the place where the consumer uses its bank credential to authenticate itself, and then provide a consent to a select account for account aggregation or a particular type of payments, which is in context with the original consent register. So based on that, the access management system will issue access token, which will be used to access the API, along with an ID token, which is to prove the digital identity and the profile of the law or authenticated customer. Also, the access management system could leverage strong factor authentication. It could be push notification, it could be biometrics. So that all can be incorporated in the step 3. Once the tokens are issued to the TPP software or the app, then it could use those tokens to access various type of APIs, accounts or payments on the API gateway. Now, at this stage, API gateway will validate all the incoming tokens in the context of what they were issued for, and it will try to validate against the access management for the standards check. Uh, whether it's like checking the expiry, the issuance, and the usage. So all those controls and logic would sit with the API gateway. If the access token is valid, then it will allow the API call to go to the target resource, whether it could be account resource or the payment resource. And also, in this API gateway, would also be enforcing all the security controls which are required for the data exposure. So from there, I would like to go to next slide, and this is my last slide. I'd like to highlight some of the benefits of the discussed ecosystem and a little bit on the use cases which or the financial products or use cases which are implemented using this. Uh, so by default, the open banking ecosystem is secure by design, which means all parties are validated before allowed entry. And the customer identification verification process can be using strong authentication to make more secure. TPPs can quickly discover and onboard multiple banks using the directory ecosystem. Um, also, the some of the use cases which would I like to highlight. So, because we can share the data with the consent, could reduce the reliance on paper-based statement, for example, which I have seen the typical use cases when we need to get mortgages or loan, where the bank customer, have to print lots of paper statement and go from door to door. But the open banking framework gave us or gave the consumer ability to share the data with the broker or mortgage advisor temporarily and let him review the records digitally rather than a paper based. Another use case which I can highlight this the ability to share data with the consent could also be used to develop a capability or actually the ability which could be used by the vulnerable customers to overlook their bank account so that somebody can monitor their bank accounts. In case of fraud and theft, they could be early notification and try to mitigate those risks. So with those, I would like to conclude my presentation. So thank you for listening. In case of any question and queries, please drop me email and I'll be happy to answer any questions. Please feel free to reach us. And once again, thank you very much.